All right, we're live. Showtime. Hello, everybody. I hope all is well on your end. As you can see, I am nice and bundled up. It is a little bit chilly down here in Florida. Believe it or not, it gets cold down here every now and again. Now, yeah, I know. All you people up north are thinking, oh, well, it's only 60 degrees down there. I'd kill for 60 degrees. Well, down here, when you sweat to death all summer long, especially like myself, I spend a lot of time outside. Coming from 92 degrees and very high humidity down to 60 degrees, it really gets to you. And on top of that, the fact that we still have quite a bit of humidity down here, the cold down here just feels different. Whoa, as NASDAQ futures are exploding. Yeah, so I'm looking to sell some micro NASDAQ against my NQ call position. So I'm going to be a little distracted. And let me explain that to you. I don't mean to jump the ship off of the Florida weather, but I'm sure that many of you would rather hear about this than how miserably cold 60 degrees feels in Naples, Florida, while you guys are probably getting pummeled with something ugly up there. So, the CME group came out with these micro E-mini futures, which for you and I, the little guys, the small fries, if you can't be putting up $8,000 to trade a whole NASDAQ contract, then this is perfect for you, just like for me. So what you can do is you can buy options on the big index, such as the S&P or the NASDAQ, and there is micro futures on there. So these are the small contracts, 1/10 the size. So the delta, which is for every 1 point that the index moves, that's how much your futures contract increases in value. We'll just use the S&P for example. The S&P 500 futures, the E-minis, the big boys, all right, they're worth 50 times the S&P 500, which is about 160,000, give or take. Quite a bit of money. That's a very large contract. And with the S&P 500, sometimes, especially as of late, moving 20 points plus in one day, that's $1,000 move in that contract. So for somebody like myself, that's a lot more risk than I'm willing to take, a lot more volatility, or the amount that my net liquidating value, or the value of my trading account, moves around. Okay. A $1,000 swing in one position for me just is not, it's too big. Okay, unless I'm risking, like I do a jobs report kind of a deal where I buy out of the money calls on the ES that expire the Monday after, something of that nature, yeah, you can make $1,000, but you're only risking a couple hundred. So because of that, that's way too much risk. So you get the E-mini, the micro E-mini, S&P 500 future, which is 1/10 of the size of the ES. So your delta, instead of being $50 a point, you got $5 a point. And okay, so instead of moving $1,000 in one day, this contract might only move 100 or 50. So if you have a smaller account, say you're only trading a $10,000 account, you don't want a 10% swing in your net liquidating value, and 100 or 200 or 300 is a little bit more comfortable for you, then you've got the micro E-minis, which are great tools. Now, what I'm doing is I buy options on the big futures contract because you can get a lower delta in those. And if you're buying them only 2 weeks, 3 weeks out, and you only trade them for a day or two like I do, theta isn't really killing you as much. So I'm able to play around with these out of the money options. If you're holding these things for an extended period of time, I don't recommend it. The only good time I think to do them is if you're doing them for a day or two, or maybe you're going into a big volatility event and you get a bigger than expected move. Oh, I already need water. Okay. But you can make some pretty decent returns on those with a very small amount of capital. And that's what I like. I want to get the most leverage. I want to risk the least amount of money and make the most amount of money. And that is how you do it right there. Okay. Now, what I'm looking to do here is I have this call position on the NASDAQ. And what I can do, based on the delta, I can sell upwards of 7 micro E-mini contracts on the NQ against my option position. So that's 7/10 or 70% of a full-size NASDAQ contract. And notional, the NASDAQ is $20 a point. Every point the NASDAQ moves is 20 points. So you got about the same notional as the S&P, but the NASDAQ, you have to put up a little bit more capital. All right. So, because you're getting bigger volatility moves, like, see, they're only bumping them around a couple points here. You go out and you sell these micro E-minis against you, or you buy them if you have puts. You trade against your position. You can make a profit. It's called hedging. Buying puts against a stock position, selling calls against a stock position. It's the same concept. You just get a lot more leverage. And, if you're playing around with a little bit smaller money and you're trying to grow your account, you want to grow it faster, it potentially is a way to do that. And then you can make that money when the position goes against you in the hedge and buy more on the dip so that you don't have what they call carrying bad inventory, which is a pain in the neck. But you can double up your position when it's pulling back. Now, this is different than the concept of adding to a loser, because if you have a position that you want to be in for 3 or 4 months or a year even, so you got buy an SPY, or you have some leaps on the S&P, whatever it is, and stocks, they don't go straight up. They pull back every now and then. That's the imbalance between buying and selling. It happens. It's just the name of the game. So what you can do is you can go out and hedge and then take the profits from your hedge and buy more stock if you're trading a longer term trend, or buy more futures, whatever it is that you're trading. So that's kind of the whole principle here. So I'm looking to sell some micro E-mini NASDAQ futures against my long call position on the full-size contract, because I think that there is just an increasing chance that we're going to see a pullback here in the indexes. And with the lighter volume coming into the holidays, I think it'll be a lot easier for them to do that. Now, I want to be kind of careful here, because when I'm buying, long the S&P on a pullback, I'll accept a sloppier entry. That's okay. Like, I don't have to get every single dime, but when I'm doing this, I want to be a lot more precise. When you're betting against a trend, when you're kind of being a contrarian, I think it's a much better to be a little bit more precise, just so that, if you have to take off, you're not getting battered quite as bad. So on that note, we'll get into what really matters, which is the indexes. Dow is down 27 today. S&P down a little bit below 1.5. NASDAQ, which made an all-time high today, up 4. All right. The NASDAQ seems to be the most bullish out of all of them, coming out of mostly the chip manufacturers, which are going to be big beneficiaries of the China trade deal. That stock's not really doing a whole lot. Now, I almost wouldn't be surprised if that's kind of how it goes maybe the rest of the year. 10-year Treasury yields down, 9. Bonds got absolutely decimated today. I believe ZB, which is the 30-year bond futures, were down almost a full point. because everybody's getting complacent right now. And that's what I'm worried about here with this position that I have on here in the NASDAQ. Everybody gets so complacent. I talked about this earlier this week. They don't think it can go down. It's a hot hand fallacy. They think that this thing is just going to keep going forever. Well, guess what? It doesn't. Even this market, even with the Federal Reserve that pumps billions and billions and billions every month, buying up bonds, buying up everything, this market will go down eventually. So that's why it's really good to be prudent. Crude oil here. I switched over to using the Thinkorswim platform because they have live futures data. I don't actually trade there. I have an account there. I've thought about getting an account there. I'm not totally sure what I want to do yet. Oil's unchanged, sitting at 60.93. Quite the rally this week in crude oil. I mean, unbelievable. As soon as I get the price data here. Okay, we got February oil here. I tried something new today on my iPad. I'm doing the multitasking thing. Tremendous. I've had this thing about a year now, iPad Pro. I bought it exclusively for this reason. And, I don't know how to do anything on it. When it comes to some of this technology stuff, my confidence level is a little bit limited, and I'm totally okay with saying that. I'm not afraid to mention that. Because we all got to learn. When it comes to technology, it seems like as soon as you learn one, they come out with something new. So crude oil did get up to $61 today. Slight pullback into the close. We got inventory data today. And with that, I'm going to close all this stuff out. Slightly lower after smaller than expected. U.S. inventory decline. That's okay. We're seeing inventories going down in crude now. And if Saudi Arabia, they're doing all these cuts, them and OPEC, etc., are doing all these cuts, we can expect inventories obviously to go down, despite the fact that we are producing crude oil here in the U.S., which is beautiful. Natural gas. One of these days, I will go into natural gas. But natural gas has really been a dud this year. Crude oil is not, natural gas. Man, these last 2 days, the day drop thing, it gets a little bananas sometimes, and it gets you a little flustered in the evening. So natural gas is something, last year, it was my biggest winner. And I'm not going to speak money, because I'm not going to sit here and tell you that I'm rich like all these other people on the internet. And I don't need to prove any of this to you either. But natural gas went up to almost $5 from $2.50 last year. And to give you a perspective on what kind of move that is, the futures, natural gas futures, /NG, the delta on there for a $1 move in natural gas is $10,000. So that is a 25. I'm sorry, we got a little yapper around here. Anyways, back to what matters. This is why maybe I just need to start editing these videos. Point being, $10,000 delta on natural gas. So that was a $25,000 move per natural gas contract. And this year, really, we haven't seen anything in it yet. And from what I understand, I don't follow the fundamentals of that market particularly. I can just see it in the chart when, it's getting ready to pop off, and you see the weather up north is getting a little bit cold. And you throw a smaller portion. Like I said, I trade mostly S&Ps, but when I see opportunities like that, I can't help but fight them. But this year, despite having a pretty ugly winter up north, natural gas really hasn't done anything. And I believe it's heavily an inventory problem. My biggest drawdown this year, which really was not a very fun experience, was in natural gas. Because guess what? I was way too big, short puts, long futures in there, and it wasn't a very pleasant experience. Hoping, because okay, we had a $25,000 per contract move in the natural gas last year. We just haven't got it. It just hasn't been a market this year that has received a lot of love. Gold today is just gold is just an absolute dud. I think it's in a little bit of a channel. I think we're going to do there's a pattern out there where it'll go sideways and do dojis and indecisive candles and chop for a while. And it'll sit there and chop all the way to the point where it hits like a short-term moving average or the side of a channel or something. And then, boom, you get a big jump up. Probably what we're going to have to see here in gold. I took out my position because I had options. And, theta just rips you apart. And they start taking volatility out of there. So I just got out. It's like, you know what? I'm done with this. I want to go put that capital to work somewhere that's going to make me money. Nikkei, slightly lower. Anyway, on to the big stories. There's really not a lot today. Not a lot of economic data, nothing. However, as we speak, we do have the impeachment hearings which are underway. I don't even care, because in my opinion, it's just a big joke. Like, politics is just a big scene, in my opinion. And I have a really hard time buying into whatever it is that these people are sitting here talking about. So, I mean, the stock market, and that's what I'm here to talk about. I'm here to talk about relevant politics. Okay, this isn't a political show, but unfortunately, politics sometimes has a pretty big effect. Like the trade deal, for example, can have a pretty big outsized effect on the stock market, because the government, they're a huge part of the economy. So you have to talk about it. I'm not here to talk about my opinion or, oh, Donald Trump's an evil person or the Democrats. And none of that, because none of that matters. We're here to make money, and I'm here to focusing on, bettering myself, living a more fulfilling life, and listening to a bunch of people rant about politics and people like Nancy Pelosi. All they do is drag you down. That's what it does. And politics puts people at odds. And it's not worth the energy. But with the impeachment, I'm looking to see what's going on with everything. And we really haven't seen a big impact from the market. I think Wall Street knows that it's all theater and knows that it's, really kind of a joke, because that's what it is. Politics is a joke. People that steal your money, and it's a joke. And Wall Street doesn't really seem to care. The only politics that they care about, the only policy that matters to them, which really isn't even politics, is the Federal Reserve. And that's all I have really to say about the tariffs. Everybody is talking about the tariffs. Yeah, everybody, it seems like, and their mother, all over the place. And in my opinion, it's just not worth the time. It's not worth the trouble. Watch the market. If you get some kind of news event coming out where the House is passing, impeachment articles, and it starts impacting the markets, then we start to pay attention. But until then, I don't think it's worth it, in my honest opinion. So, from there, pretty quiet event. We have some economic data coming out tomorrow. Where is it? This is my exact point. Economic data today from Market Watch. Today's the 18th. Tomorrow, we have housing starts, building permits, industrial production, capacity utilization, job openings. Eric Rosengren, I think he's from the Fed, comes out. Rob Kaplan, I believe he's a Fed guy. Oh, excuse me. Tomorrow's weekly jobless claims. Philly Fed current account deficit, existing home sales, leading economic indicators, whatever that means. All right. But really, the big day is Friday when it comes to economic data. They're hitting them hard at 10 a.m. Those algos are going to be busy. Anyway, from Naples, Florida, I think I'm going to wrap it up. This is Vincent Freese. Let's see what they do to those S&Ps tomorrow. If they pull them back, they sold them into the close, which kind of rattled a lot of people, but we'll see what happens. So from Naples, Florida, Vincent Freese, I'm out. Let's make some money.